So today we're doing a deep dive into Kiva.
Right. The platform that essentially gamified microfinance.
Exactly. I mean, imagine being a banker to the poor with just $25. It's a simple idea that has had a huge impact.
Huge is the word. We're talking over $2.4 billion in loans since 2005. In something like, what, 90-plus countries?
Yeah, and the mission is so straightforward, to
Yeah.
connect people with capital to underserved entrepreneurs. It's about bridging that gap.
But the interesting part isn't just the mission, the why. It's the mechanics. The how is where it gets really fascinating.
It is, because when you go on the website, it feels so direct. You see a photo of a farmer in Peru, you click lend,
And you assume your 25 bucks is zipping right over to his phone.
but that's not quite what's happening under the hood, is it?
Not exactly. Kiva runs on what they call a field partner network.
Meaning they aren't the ones on the ground vetting that farmer.
No way. A tech company in San Francisco can't effectively assess credit risk in a rural village in Uganda. They rely on local microfinance institutions, or MFIs, to do all that legwork.
And that leads to this concept of pre-dispersal, which I think is the most misunderstood part.
Definitely. By the time you click lend, the borrower, more often than not, already has the money.
Because they needed it for planting season like 3 months ago.
Precisely. The local partner fronts the cash. So when you lend, you're not funding the seeds in that moment. You're basically backfilling the capital for the institution.
So it's more about providing liquidity for the whole system to keep working.
Right. It allows the partner to turn around and lend to the next person. It's about scale, even if it breaks that illusion of a direct real-time connection.
Okay, let's follow the money then, because this is the killer stat for me. 100% of the loan amount goes to the field.
100%.
Right.
Kiva doesn't take a cent of that principal for their own overhead.
That's incredible for a financial platform. How do they keep the lights on?
Well, that's their whole business model. It's built on a voluntary tipping model.
Just tips.
Yeah. When you go to checkout, they ask if you want to add a bit extra for Kiva's own operations. And that goodwill funds about 2/3 of their entire $30 million budget.
But that brings us to the friction point in the model, the part that feels a little off.
The interest rates.
Yeah, I'm lending my money at 0% interest, out of altruism. But the borrower is usually paying interest to that local partner, sometimes really high rates.
And that is the single biggest controversy Kiva faces. But you have to look at the last mile costs.
What do you mean by that?
Well, processing a $500 loan in a remote area is expensive. There's travel, paperwork, high transaction costs. The partner has to charge interest to cover that.
So Kiva's role is to give them that zero interest capital to hopefully lower those rates for everyone.
Or to reach borrowers who are seen as too risky to begin with.
Speaking of risky borrowers, the data really challenges some big assumptions, like 80% of the loans go to women.
And through Kiva Labs, they've shown that refugees, who are normally deemed completely unbankable, they have a repayment rate of about 97%.
Which is basically the same as the portfolio average.
Exactly. It just proves that perceived risk is so often just bias.
They're also tackling this in the U.S. with a different model, right? Kiva U.S.
They're replacing credit scores with something they call social collateral.
So trust becomes the currency.
Pretty much. You get friends and family to vouch for you by lending to you first. That social trust and pressure acts as the underwriting engine. It's digitizing how communities used to lend before big banks existed.
It's just a fascinating blend. You've got high-tech storytelling fixing this ancient problem in the credit market.
All while running a massive financial platform on what's essentially a tip jar. It shows that financial systems don't have to be purely extractive.
It really leaves you with a provocative thought, doesn't it?
Mm.
I mean, if a financial platform can facilitate billions of dollars and run on voluntary support because people believe in the mission, what other industries could ditch mandatory fees and just run on community goodwill? Something to mull over. Thanks for listening to The Deep Dive.
Thank you for listening to Mission Possible, innovating for the world's most marginalized. This podcast is built on the outstanding work of our students, whose curiosity and commitment drive much of the research and storytelling you hear. Each episode is grounded in academic research and shaped through close collaboration with our partners. To learn more about the research and partnerships behind this podcast, feel free to contact us. Thank you for joining.